Hello and welcome to our 15th episode of Your Money Life Coach on eRadio with me, Barbara Mundell. This is your weekly Wednesday inspiration to act and manage your money better. Now, this week we're going to focus a bit on short-term insurance and what are the 5 things that you need to take into consideration when you take out insurance for your car or when you're reviewing your insurance for your car, which is also very important that you do that at least annually. My advice is always get a professional to help you. Short-term insurance can be a minefield, and the slightest of detail that you get incorrectly on your short-term insurance contract could lead to your insurer not paying your claim. Now, remember, ladies and gentlemen, insurance is a contract. The insurance company says that we will cover you in the event that anything goes wrong. In return, you must pay us a monthly premium. It's very important that you pay that monthly premium on time, because failure to pay that monthly premium might lead to you being without cover for a period. So what 5 things should you take into consideration when you review or take up new short-term insurance for your car? The first thing is your excess payments. Now, an excess payment is there to help the insurance companies manage the risk and also prevent you from claiming for unnecessary small things like fender benders that aren't that serious. Now, it's also got a very big impact on your premium, because if you've got, for example, a 10,000 Rand excess or co-payment when you claim, that excess payment is quite substantial generally towards whatever it would cost to repair your car. Some insurance companies also have different excess payments for when your car's a write-off or when there is a repairable incident. So that's something you should consider. There is certain insurance companies that do offer you an excess free, but then obviously that premium is slightly higher. The next thing you should consider is who will be driving your car. Make sure that you at least allow the insurance company to allow you to use another person to drive your vehicle as and when. You never know what happens, and it will just be that one time that person uses your vehicle and something will happen and then you are stuck without cover. So they generally have the primary driver, which will then be yourself, and then you can nominate other drivers, or you can say any other person. Some insurance policies limits the driver to only you as a person. It does save a bit of bucks, but then if someone else is in a situation where they have to drive your car, just be cognizant of the fact that you won't have cover. The next thing is car hire. Now, most people don't really realize the extent of the benefits of car hire until they have to claim, or in the event that they are in an accident. Car hire is not only there for you to have a car while your car is being repaired, or after your car has been written off. They generally allow you to have car hire for a certain period of time until you get a new car. The problem with car hire is generally that people want to like for like, and then it becomes expensive. Or what people don't realize by taking the car hire benefit is not only that you'll get a car when your vehicle's being repaired or for a while after it's been written off, but it also allows you the opportunity to get a car from closest where you've been into the accident. So let's say, for example, you go on holiday, you're down in Cape Town, for example. Now something happens to your car. How do you get back home? With the car hire option, it often allows you to hire a car in Cape Town, drive it home, drive around there, and then most car places allow you to drop it off anywhere else. But again, confirm this with your insurer if you are in an event where you are making use of car hire. Then we've got the replacement of your vehicle. Now, the replacement value of your vehicle is very important. You get various, and they all call it different sorts of things, but it needs to boil down that you get the full retail price. In other words, if you were to sell your car at an arm's length transaction to a willing buyer who's willing to pay the most possibly for your car, that is called the retail price. Some insurance companies call it different things, but you want to try and insure your car for as much as possible, which generally is the retail value. Some insurance companies say they'll offer you a trade value, on your policy, that then just means that whatever you get out in the event of a full write-off will be a lot less. And then lastly, your correct details of your car and any extras you have in the car. Now that's very, very important, because if you have a full write-off, you might not be able to claim for all the additions that you've spent on your car. And we don't always realize what additions we actually do add to our cars. Things like extra bumpers, extra seats, extra trimmings, extra radios, sound systems, things like that, that's not part of the car's standard manufacturing process when it delivers on the floor. Any optional extras, for lack of a better word, or anything that you've done, like a spoiler or any modifications to your car, like for example your car only came out with normal rims, now you've added mags, that is an extra, ladies and gentlemen. So be very careful that you list all those extras and make sure the details of your car is 100% correct. Remember, it's a contract. You say to them, I want to insure this car, you need to pay me out this car. So if your details is incorrect, so they technically haven't insured anything for you. That's it for me today. Be sure, if you find this episode useful, to share it with your friends and family from the eRadio podcast. Tune in next week Wednesday, where we will be giving you some more tips on how to manage your money better. You can reach us on Facebook at Your Money Life Coach, or our website www.yourmoneylifecoach.co.za. Till next week Wednesday then.